Welcome back to Pan-African Personal Finance, where we keep looking at our theme regarding property and home ownership. But now for the West African view. My colleague Onyi Sunday speaks to Dipo Davies, CEO of Real House Communications, to get his view on real estate in Nigeria.
Now, how would you describe the landscape of home and property purchase in Nigeria?
Now, real estate in Nigeria is very, very broad because there are plots of land that are going for 350,000 naira. And then there are plots of land that are going for more than 350,000 naira per square meter. So that gives you an idea of how wide and broad the market is. On the lower level, we found out that going towards the outskirts of Lagos, there's a bustling and very vibrant real estate market, typically ignored by those playing in the high end, but you will find that there's a lot of transactions going on. At that level, life is quite basic. We're talking about the Omoniles, the traditional land-owning families, where the developer probably has to build a fence and have policemen until the estate is up and running. But yes, they're doing a lot of business. We're talking about the Shimawas and the Agbaras and such areas just at the outskirts of Lagos. And then we have as we move in, the prices go up. So we have the middle income sector, then we have the high end, and in between you have various categories. So it is a wide range, and I keep telling people that there is actually space for everyone to play. The thing is, you have to look at your budget, look at your vision, look at what you intend to achieve, and then if you get the right information, you will be surprised as to what you can achieve in real estate.
Now, what should be key considerations for consumers before purchasing assets?
Real estate is probably going to be, for most people, the largest single item, largest single asset they will purchase. So it's very important that they have a clear idea of what they want to achieve. If it's a family home, that's fine, as long as you know that you're going to be living on an asset that is not producing anything, probably until you pass on and your children then well, maybe sell it off or not. So you need to be very clear about what it is you want to achieve. If you want to get income from it, you can find that in certain areas you can get 5% return on your investment in terms of rent, and going all the way to about 10–12%, which is usually about the height. There's also commercial real estate that you can consider. There are shops, as small as shops to warehouses. So it's actually for you to now get the information, and I think be very clear about what it is you want to achieve. I'll give you a simple example. If it's a family home and you have 2 children and you have the opportunity to build, we advise that you build the house in such a way that you can partition it into 2, so that when you pass on, or you want to gift it to the children, then you can easily split it into 2. So those kind of long-term thinking is what I think people should have in mind when they're buying real estate.
Well, talking about getting information, how much information is out there?
It's true, information is very hard to come by. But I'll tell you that is the same for most jurisdictions, even in the UK, where it appears there's a lot of information on the websites of the most popular property websites. But you still need an understanding of the area, an understanding of the market, an understanding of even the law. So coming back to Nigeria, which is even quite opaque, what we suggest is that when you make up your mind to buy property, give yourself a long lead time. You are not just going to go out tomorrow and buy it. It's going to take you some time to understand the location, first of all, understand the kind of titles that go on in that location, understand the dynamics of that market. Ways you can do that is to become well known to the agents the estate agents that play in that market. You will find that after a while of you visiting and calling them, they will start telling you what's available, they'll give you more information, and you begin to understand that. Do not rush into this purchase. You may still have this asset 50 years down the line. So what's a few months? So granted that there's some things are not so clear in this market, but they are not that completely out of sight for even the layman investor. So once you give yourself time, understand the location very well, understand the titles that can be given, be clear in terms of the returns that you can get from the property, and then by the time it comes to taking a decision, you'll find yourself ready and not so scared, if that's the word to use.
What kind of finance is offered to Nigerian consumers who want to purchase property?
Right now, well, basically the most common one is cash. So you see the property, you pay cash outright. Following from that is a payment plan offered by either the owner or the developer. We're finding that that is getting more common these days, where you'll be allowed to pay over a period of time. In fact, we know some developers who would even allow you to move in and over 2 years allow you to pay off the purchase price. And that is as a result of, there's a bit of glut in certain aspects of the market. So that in those areas you'll find that you're allowed to pay over time. It happens in the high end and it happens in the low end. But wherever there's glut, wherever there's the consumer has more bargaining power, this happens. The third one is off-plan. I'm now talking in terms of popularity, where the developer has come up with a nice design and so on and so forth. And he tells you to pay instrumentally over time, but the property is not ready. So you pay over time, and then maybe at the end when you're getting the keys, you pay the final installment. The fourth one that is now getting more and more popular is called the joint venture. Now this happens, you have the land, and you don't want to sell it off, but you want to, retain some interest in form of developed property. So you engage a developer who looks at the land from the point of view of the value. He looks at its construction costs, and then you split the final project, the completed project, depending on the contributions. A mortgage is the very last one, which, according to reports, it's very, very rare. In fact, it's rarer than most people think. In fact, most people use it more like bridge financing. They just want to, they'll pay over 2 years and so on. So it's very rare, but we find that people in certain sectors, for instance, if you work in banking, you work in telecoms, or you work in one of the more favored industries, the banks tend to be willing to give you mortgage loans, and more especially if it's part of a package to entice your employer then the employees in those sectors get mortgage loans. But very rare, very rare.
Now, why do you think mortgage financing isn't encouraged in Nigeria?
Well, I think to me there's a structural issue. We have the stories of short-term funds and mortgage being long-term financing. The bankers have, should I say, challenges in coming up with the right type of financing to be able to pass on to the consumers. But I actually think that there's a need for an innovative approach. If mortgage is going to work in Nigeria, there's going to be need for an innovative approach in terms of what the bankers allow. For instance, there are no land loans for whatever reason, and they don't give mortgages on shells, what we call carcass buildings. And those are the ones that are really moving quite fast these days. But even from the consumer point of view, it's even a good thing that there are not too many mortgage loans, because if you look at interest rates in excess of 20% over 15 years, that's a killer loan as far as I'm concerned.
Now, what terms and conditions for financing exist, for homes or even owning real estate?
The best you can typically get now is to agree with the person selling to spread the payments over time. It's not as uncommon as you think. Although the figures are usually kept close to their chest, most people would not actually come out and say that prevails. But yes, what has happened now is that the developers and the sellers of property are finding ways to quote unquote give their own mortgages, and you can spread it for as long as 4 years in some cases. So if you're looking at the low end of the market, you say you want to buy a 1 million naira plot in say Shimawa, which is somewhere along the Lagos-Ogun axis, you would, if you pay outright, you would pay $1 million. If you want to pay for over 2 years, you pay like 1.2 million. And if you want to pay over 4 years, you may pay as much as 1.6 million. So you then pay a portion and get your letter of allocation, and then you spread the payments over the remaining 48 months. So what the developer gets is that spread, I guess, as his own form of interest.
What are the average payment terms? Like, how does this tie to how long consumers keep their assets?
Well, for most people, most people don't buy to resell anyway. So that opportunity to spread payment over time is welcome. Most people also, from my experience, tend to buy for the family to stay in the houses or to build to live in. So the idea that you can spread payments helps them, but they typically tend to hold it for as long as possible, maybe till death in some cases, yes.
What important insurance or risk covers exist for property owners?
Yes, there are standard covers for buildings. How this works is the insurers come and assess the cost of constructing the house, not the value of the house now. So if the value of the house may be 50 million, right, but the cost of rebuilding it if there's a fire or tornado or windstorm, right, maybe 15 million to build the actual house, right? So they would insure your insurance value will be 15 million. So that has to be clear to many people, and it's a very low rate of, I think, 0.26%. It's really quite affordable, in my view, for the kind of cover that they give. But apart from the house itself, there's cover for the contents of the house as well. So if there's flooding in the house and your laptop, your TV all gets damaged, it's actually quite available. And most insurance companies give out these policies.
Now, this, of course, depends on who you're buying the property from.
Yes, well, typically the tenant. Are you talking about tenant, landlord? Yes. Yes. So typically the tenant would insure his own items in the house, right? His own movable items, and the landlord is advised to insure the building itself. And in the agreement, there's typically what we call an abatement clause, that between the time when the house burns down and the time to rebuild, the rent stops and then the tenant can continue. So it's really something that works for both parties.
Now, the picture you've just painted, I believe, exists in the formal setting. What happens with the traditional land or property owners?
Well, it can. Again, it's all information and the culture. Would you say you want to insure against your house burning? The guy will probably make a gesture to say, over my dead body. But it can be extended easily. In fact, I think it's a no-brainer. But I think people's attitudes and so on, you know, they're actually when you're building, it's actually the law that you get insurance cover. But from what I can hear, what I understand from the market, it's more or less ignored by everyone who builds. So it's more of the culture of the people, and I think the insurance companies may want to come together to advertise this fact and the benefits to consumers.
That's it for Personal Finance this evening. A special thank you to both our guests this evening, Stephen Barker, Head of Home Loans at Standard Bank in South Africa, and Dipo Davies, Chief Executive of Real House Communications in Nigeria, who spoke to my colleague Onye Sunday. Remember that we want to hear from you, so get in touch. You can tweet any of your comments to @CNBC Africa using the hashtag Finance410 or to myself @Kukumfupi. Until next time, it's goodbye for now.